Good morning, guys. Um, I'm just using TraderView. I still have Thinkorswim and all my other charts. I'm just using TraderView as one of my charts throughout the day. I think their functionality is really awesome. So just trying it out. But of course, I haven't made the switch on all my other charts. I'm a bit of a, you know, um, like slow on the uptick with like new technology, man. Scotland, good morning, brother. How are you? Hopefully you had a good one with family. Thanksgiving was good on this end. Lots of good food. My immediate family, like my mom and stuff, they were in Florida, but I was with my fiance and her family, so all good. Although we did just get a snowstorm, so that was a bit of a pain. So it snowed for like 24 hours straight past 2 days. This is a good question, and I'll answer it by telling you this. So, if you buy a position at a 5 minute opening range break and the stock hangs around the same price that day, do you keep the risk open overnight or reduce some size? So, the first thing I would remind you is, how is your stock acting versus the market? Like, are you trading in a group which is acting really well? In other words, let's just say you buy a 5 minute opening range break and the market looks fine, within the first few minutes, right? Like the first 30, 40 minutes of the day, market's acting pretty well. You buy that 5 minute opening range break, you have a, 2% stop to low of day, something like that. You're expecting hopefully some push because the market looks fine. It's a nice tight base, maybe call it like something like NNE, right? Then all of a sudden the market just starts to get its ass kicked, right? For like the remainder of the day, the market's just going down and down and down. Let's just say the market loses like 1.2%, 1.3%. Not like some terrible catastrophic day, but in other words, the market had a bad day, right? Down a percent and change. But if your stock couldn't even break low a day, you're actually in a stock that's showing relative strength. I want to give that one the benefit of the doubt and have the opportunity to work. So I just keep my stop the way it is. On the flip side of that, if you buy a 5 minute opening range break, you've got a nice chart. It looks like NNE. It looks like it might want to break out. And then all of a sudden, the market's ripping and it's up 1.5% to the upside, 1.3, 1. Whatever it is, 0.9. But your stock is stuck right at that 5 minute opening range break. And a lot of the other stocks in the group are also acting poor. Then you've got your answer, right? And your answer is your stocks are actually showing relative weakness today. And what if then the market or the group begins to pull back a little bit more? It's likely your stop's going to get hit. But, I don't really want to be in names that are showing relative weakness on the day that I buy it. That's not very helpful. So, Wolf. Yeah, a lot of these names, they just ran right back up into supply. And it was funny because I was looking at a Wolf, I was looking at a Cipher, and I was like, okay, do these make for some good shorts coming up running into all this supply? Or do we think they just break this all-time high and continue? I didn't think that was going to be the case. And I'm already short iron, and this one acted already fairly poor, right? Couldn't even get, reclaim it's what is this, last Thursday's highs. So and now we're gapping down some. So not too bad. I'm just still sitting there with some position on. Yeah, gold and silver, very nice. Very, very nice. I don't know who or if any of you guys own gold and silver, but definitely nice to see. Make sure I have an alert there. Yeah, metal's continuing to act really great. You're long some gold futures? Yeah, almost as you should be, honestly. I don't have enough gold, unfortunately. I don't have enough gold, and I don't have any individual silver names, although I should. Hecla probably being the one that I should have gotten to. And commodities, and I've talked about this before. You guys have probably heard me mention this if you guys have been here listening to me long enough. Commodities are best bought off of ascending moving averages, right? If you were there to buy this on Friday or as a higher low setup on that Monday, this was really good on the Monday, the 24th, as a break over prior day high, or on Friday as a pullback and then a 620 setup into that 50 simple moving average and right into a support gap as well. But, anyway, kind of sucks that I'm not in it. I am in NEM. And this one's also gapping up. So, that's good for now. You've been in PAAS for a few days. Why does it feel like a chase? If you've been in it for, I don't know, 3 or 4 days, there's no real chase here. It's not extended from the 50 simple moving average. It's in a steady uptrend. Silver's acting well. I mean, dude, that's the whole job, dude. You buy something as it's trying to go higher, and then you sell it, you trim some higher, and you just let it work. Now, Mosaic is, I don't know, I want to say Mosaic is a laggard. I don't know why you'd even be looking at this. Why would you even be looking at this? It's below the 2. You know why your PAS is working and AG is working? Because they're in an uptrend. You want to know why Mosaic looks like such a dog? Because it's below the 200 simple moving average. It's pretty simple stuff. It's not rocket science, brother. There's no reason to be looking at this Mosaic. You know that? Like, think about looking for the bottom on Mosaic and then you being in PAAS and it going up and it feeling like a chase. That's what you want. Do I make any trades in pre-market? Yeah, there are sometimes. Like if I absolutely need to get out of something, then yeah. Very rarely do I take a trade pre-market. I want to say the last trade I took pre-market was Recreational on the short side. I took a short on Recreational on, what day was this? November 25th. Is that here? It's right here. I took a Recreational short right in here. I wonder if I can go to like a 10-minute chart and it'll show it. Whoops, 10. Oh shit. Hold on. Let's see if we can go back far enough. This is the last trade I took in pre-market. It's right. Is this the 25th? Yeah, right in here. I think it was in here. Yeah, it's like somewhere in here. I use SMAs on the daily. I use EMAs on a smaller time frame. How am I handling Caterpillar? One day at a time. I think Caterpillar looks fine. Nothing wrong with Caterpillar here. Slight little gap down, but not really even thinking about it. Yeah, Caterpillar looks fine. So my stop will be, on this ascending 20 simple moving average. This is a good question too. If multiple stocks in the same sector, gold, break out at the same time, what criteria should we use to decide which one to buy? Thank you. Okay, so if you've done your homework beforehand, and you noticed a bunch of nice setups in real time, like the day before, and then they all start breaking out, you should already kind of know, if you've looked at their earnings and sales, which of them have the best earnings and sales. Okay, so that's like a really good first initial step. Knowing which ones have the best earnings and sales, those are the ones that institutions are most likely to continue to buy. They can all go higher in the short term together as a group. The ones with the best earnings and sales will go up further or for a longer duration because of that. But that's not what would necessarily get me to buy. You combine that with the one that moves, that has the really solid liquidity, that what you need. So like there's a lot of gold names out there that trade 30 million bucks a day, right? I cannot buy those. I need like 100 million plus. So instantly we just go ahead and wipe out a bunch of stocks that I can trade in the gold and silver sector. Okay, so they have to have sufficient liquidity. And then what's number two? They have to move somewhat. I mean, the quicker the better, right? Obviously, when you own something like NEM, it's very, very slow and it's not super exciting, right? Like what's going to move faster? NEM, although, it looks to be breaking out, which is great. Or is something like Hecla going to move a little bit faster? So for instance, NEM moves 3.7% per day. Hecla moves 6.7% per day. So big, big difference there. Yeah, what's up, my love? Buddy, Bailey. Bailey, come here, buddy. Lay down. Lay down. Good boy. So that's kind of a really good way of thinking about that. Really, really great question. MMM, 3M. Oh yeah. But boy, this one's slow too. Yeah, 2% per day. It's not ownable, but I will just set an alert on this thing. What are my top 5 gold stocks, or gold and silver? If we're just saying gold, I mean, I would just base it off price action, right? So like NGD, since it's at new highs. But again, what's the difference, right? Something like NGD is only trading 190 million bucks a day. Plenty, plenty for me. But something like Newmont's going to have like way, way, way more liquidity. So, and it moves a little bit slower. So, for some people, you can size it up a little bit more. So it really depends what your goal is, right? If you're someone who's trading with like, 200, 300, 500 million dollars, like if you run like a family office, you have to prioritize liquidity. So if you're asking like what a small retail trader's favorite gold stock should be, then the answer is which one moves fastest. If you're a family office, or you're Stan Druckenmiller and you're like, I need to own some of these gold stocks from a few months ago, which ones have the most liquidity? Right? That's you'd say to yourself, which are the 5 most liquid, and you buy those. Could AEM be an entry today? Yeah, I don't see why not. I mean, it's gapping up just a little bit, but it's not very extended. I don't know. We'll see. Maybe a 5 minute opening range break, but I don't know. I don't know that today is the right day to execute on these metal names. Maybe. We're gonna find out at the open. GFI is the other one I'm pretty interested in, right? It still has this really nice base that it can get through. Yeah. On the daily, I use simple moving averages, right? By the way, this white, which is the 100 period, and this gray, which is the 150, I don't really trade around them. 200 is to ultimately set the bigger picture trend. I more so trade around the 10, 20, and the 50. So simple moving averages on the left, exponential moving averages on the right. Imagining a wedge down in consolidation on this buy, what sectors would be best to look for shorts? Oof, man, we've had such nice action in so many groups. I mean, I would tell you that the names that really didn't come, that haven't bounced back in any strong kind of way, like, do I want to short CRDO? Not really. But I look at something like iron, and maybe this could just be a bear flag before going lower. We kind of saw some similar kind of action in the quantum stocks a few weeks ago. That was kind of like this. You make your first leg down, you consolidate, and then you roll over lower. And then they're just kind of doing the same thing. You roll over, you consolidate, do you roll over some more? But I am personally more so focused on a Netflix, right? I actually thought that, I was watching this thing as a short right in here on Friday. So we'll see how that ends up playing out. So, and Cypher's a little disappointing too, because I see how much it gapped down as well overnight. And a few days prior, I covered the last of my short at $19, and we're now back down sub $19. But I wasn't willing to hold this thing back above the 20 simple moving average. So Amgen high type flag. Oh yeah. I think I got an alert on this one too. Needs maybe a little bit more time. Yeah, so with Hecla, that's kind of how I view it, right? If you bought this thing on against the 50 simple moving average and you catch this kind of a move plus now a gap up, yeah, I'm using this 5 days. Even if you bought it on Monday, I'm using this week long strength to trim into that, right? I'm not just like staying married to Hecla and not taking some off. So yeah, I would use this strength personally to reduce into strength and then just continue to use then the trade is done, right? So like, again, I can't tell you what to do. You have to do what ultimately makes you most comfortable. But like hypothetical, I bought this thing on Monday. Let's say you're sitting there from like 13 and a half. At 17 and a half, I'm de-risking the entire trade. I'm paying myself on half my position. I will continue, the way I view this is you could be up 28% in 5 days. I'm taking half off the table. If it goes higher, I still have half. If it comes back down, thank God I sold half. That's literally the way I would treat it. So that's literally the way I would treat it. There's a link on my YouTube. Top notch. You like PII? Let's take a look. You don't see people talk about it a whole lot. Yeah, it just got above its 200 simple moving average. Let's just let's take a peek at this one really quick. Recreational vehicles. It's Trades 56 million bucks a day. It's not in the let's see if there's any others. THO, DOOO, BC, PII, Hog. You know why nobody's talking about this? Because the group kind of sucks. I'm just keeping it real. The group's not all that great. Like, you haven't missed anything yet. Curious if you look for amount of basing in stock before buying. Sometimes it looks like you find bull flags rather than traditional. Yeah, it really depends how big the initial move was. If it was like okay, so if you're looking like at a GEV and you get this massive kind of a move, a long base is necessary. If you're looking at a short move in terms of duration coming out of a base, then a 3-week high type flag is more than enough. Nat gas names, EXE. Yeah, EXE is not bad. I don't know that I'm a buyer of this one, here on this 5th up day in a row. But even something like EQT, another one with like a super nice base too. Yeah, EXE, another one, or EQT, excuse me. CRK, this one got beaten up pretty hard and is trying to come back. Yeah, not bad. I like it. I don't love it just yet. If you were a little bit faster to buy this thing a few days ago, remember, for me, commodities always best bought off of ascending moving averages. If you are still in CRDO, would you keep some over earnings or are you out? It depends where you own some from. If you bought CRDO as an undercut and rally on the 21st, then I'd be trimming some into strength. And really today it would be on a little bit of a gap down. I would be trimming some and then I'd just be keeping the rest. Yeah, maybe. Yeah, Prax looks like a nice high type flag. Yeah, I can't blame you for this one. I don't know how I feel about owning individual biotechs. I'd rather wait for the XBI to consolidate itself and then buy LabU. I have a IBKR account, but I don't really trade out of it. IMVT, where would I draw the pivot? I would almost draw it kind of like as a little load sheet setup right through here. But I always prefer horizontal pivots. But really, no hurry to buy this name. You bought GRAL on the 24th. It depends. So if it's like on GRAL, if it's going to take out a prior bar low, like if we're going to take out like $107, 107.5, which would effectively be prior bar low. If we're going to take out a prior bar low, then I would trim. But really, you got this 106.60 5-day moving average. So as long as you're above that, I don't really see too much of a reason to, freak out. But, because obviously it made a nice push and then it's done nothing ever since then. And like a 1-day push, like, isn't really enough to get me totally off of a trade or to get myself to trim. But man, Netflix already showing some morning weakness too. Should have shorted more of this sucker on Friday. Whoops. Yeah, VRT. Yeah, VRT is looking good. Now you're just getting a gap down though, which is kind of healthy, right? You just get this a a lot of these names, they had that washout going into Friday, and then, just these really nice quick bounces, and then a little bit of a stress test today with the gap down. So we'll see. We'll see after today, what names are holding up best. Excuse me. Yeah, not bad. TTI, Tetra Technologies, conglomerate. Any other of these that are acting pretty dang well? Let's see. You have Honeywell. Oh, yeah, you have 3M. It's in the same group as 3M. SEB is another one that's just been going straight up for a while. Look at this SEB. Holy shit, this thing's expensive. Yeah, not bad. Not bad, but I'm going to assume probably pretty slow, right? No, it's not that slow, actually. Yeah, TTI is not bad. Not bad. Yeah, I kind of noticed ONDS gapping down a little bit overnight. Obviously, a little bit of a bounce back. I don't hate the way this looks. For me, it's got to take out a prior day range, or option number 2, a 50 simple moving average undercut and reclaim. So it's got a couple options here for how I'd get involved. Take out a prior day high, and then play it as a higher low setup, or a 50 simple moving average undercut and rally. What do I think about CLS? This thing, okay. One, I wish I still owned my CLS. Let me just preface by saying that. I bought CLS down at $100 and I sold it far too early like a schmuck. I don't know how I feel about this one up here. You guys got to understand, this thing has been going for a really long time, right? So just call it really got into a stage 2 uptrend, 2 years ago. 2 years ago. So, and then it's up quite a bit from those April lows. Not that matters, but right, it's up about 500% on those April lows. So, I don't know. It's a little much. It's a little much without a bigger base. I don't know. It's a tricky one. But I'll tell you this. If you bought it as a 50 simple moving average undercut and reclaim, again, on Monday, I'm not showing up to buy this thing on the 6th green day in a row anyway. So it just still needs to finish building out a base. What breakout structure? Out of a flat base breakout. And normally a nice long base. The longer the base, and then you get that first touch setup, which, my buddy Alec talks about all the time, people wish. That's like one of the, term phrases that he coined, that first touch setup. Normally the way I kind of look at it is the first touch of the 50 day after a breakout is the best. Give me a second. Got the dog barking. Bailey, come here, buddy. Please explain the undercut and rally and how's it different from buying a dip below the simple moving averages. Yeah, you're not buying the dip below the simple moving averages. You're waiting for it to actually reclaim. And again, you're making sure that your focus is on a group where there are multiple stocks that are acting well. That's like, the most important part of a UNR setup. And like, are you gaining traction right away from when you buy that undercut and rally? It's a setup that I learned from Gil Morales. A very, very simple to understand setup, and then you're taking it down to a smaller time frame to get positioned. At this point, silver stocks, there is no buying silver stocks today. If you don't already own a silver stock, you've missed the boat. Right? Today is not the day to like put on, PAAS. Right? Today is not the day to buy Hecla. Today is not the day to buy, FSM. Right? So Fernando, there's just nothing to do here, brother. If you missed it, you missed it. Right? But like, chasing a gap up on day number 5, that's it doesn't work. So there are no top 3 silver stocks to watch today. You should already be positioned in them. If you're not, then you just wait for them to set up again, but there's no reason to even look at them today because they're just not buyable. Right? Check back in a couple days. The Real, a lot of retail clothing or retail apparel companies are acting great. Yeah, Real is luxury goods, but same thing. Consumer cyclicals have been on fire lately. If you get a breakout, then a name sort of consolidates for a really long time. How do you stay in that stay in it before you move on to another opportunity? Why do I have to move on to another opportunity if when I buy a breakout, it's with proper position sizing? The only people who have to, quote unquote, move on to another opportunity is if you are fully invested and on margin. Then all of a sudden, your stock's maybe not doing anything because it's consolidating. You maybe want to reallocate that money. But if you just bought like a 10% position and then it breaks out and it moves 20, 30%, and then it just begins to consolidate, why do you have to move on to another opportunity? Why can't you just let that thing consolidate, build out a new base above the 50 simple moving average? Meanwhile, focus on getting the other 90% of your dollars in your portfolio to work, right? If the rest of your money in your portfolio was working for you and you were on margin, then I would say, well, this one's been doing nothing for the last 30 days, okay, fine, I get it. But there'd be no reason to move on to another opportunity so long as the stock you own from much lower is not doing anything wrong. So, when I hear people say what you just said, that sometimes feels like either you're fully invested, which, okay, fine, I understand you need to get rid of the stocks that aren't really doing anything awesome. But on the flip side of that, you might have too much position size so that like you can't actually sit through that consolidation. But if you're sized in properly, right, a 10% position should just be able to consolidate after a 30% move higher, right? It should just be allowed to do absolutely nothing. And there's no reason for you to get rid of it and look for another. You should, after you buy something, you should immediately start to look for your next opportunity because you've got to get the rest of your money to work for you. But once you're in something that's working, don't get impatient with it. As long as it's above an ascending move. Like, okay, here's a good example because this one consolidated on me for a while. When I bought this breakout and then it pushed and then it started to do nothing in here, I didn't go looking for another opportunity. I just let ARK go sideways and build out a new base. It's not like I had to pull my money from ARK because it had to be somewhere else. No, on the contrary, I had more money to get to work and I was just done focusing on ARK. The trade was done, right? As long as it was above and closing and building higher lows, there was nothing to do with it. It wasn't until it closed and broke below its 50 simple moving average that I knew it was time to leave. And that ended up being, for now, the right decision. Intel continues to rumor on. So what is Apple going to get into the semiconductor space? Yeah, Intel was good on what day was this? Wednesday? ROIV, Roivant. Yeah, not bad. I don't know how I feel about individual biotechs though. You better know how much money they have on hand. That's really, really important. If you don't know how much money a biotech has on hand, what their cash burn is, what their cash runway is, if they have any PDUFA dates, if anything, you better know it, or you can get caught in a nasty gap down, which is really why I don't trade individual biotechs too often. My thoughts on Baba? Good, but not great. Needs to get back over November 25th high and back above the 50 simple moving average. Yeah, Johnny, those are definitely some of the right themes, honestly. Yeah, it looks like department stores. Yeah, retail apparel has been good. Precious metals and mining has been good. Copper's been nice. Steel has been nice. Gold and silver have been really good. Palladium, which I haven't really found a way to trade that, has been pretty good. So the metals, um, biotech has been incredible. Medical devices, healthcare related, pharmaceuticals. If you like, look at the PPH, and obviously Lilly has been really good. And this thing has given just clean setup after clean setup after clean setup. And then here's another one that was just like your, just your traditional small high type flag. So yeah, there has been a lot. There's been a lot of breadth expansion over the last few weeks. It could be that home builders are starting to come on. Yeah, Lemonade not bad. All Lemonade did was rally right back up into the high volume close. It still has to get out above 78.73. Still looks pretty good. Ideally, build out, check back into the 20-day, build out a few more days, and then get through that level. Or you can look for it maybe against a ascending 20 simple moving average, something like that. Um, I don't know, but that kind of looks like maybe a spot to just keep an eye on and then see if you can maybe get yourself involved. But again, ultimately, it depends on how is your stock acting compared to the market. Right? If this is breaking down all on its own when the market's just ripping, maybe you're starting to deal with a little bit of relative weakness. If this is checking back when the market's checking back and then starts to bounce when, maybe the market is still kind of consolidating, then you got some relative strength on your hands. TTMI, it's just sloppy up the right-hand side. Like this is not tight price action. So not tight at all. It's bouncing. It's a, what do they call it? A tennis ball. Did pharmaceutical break out of a multi-year downtrend, and would that affect how you trade it if you're already in it? I would just trail your moving averages. Don't overthink it, right? As if you're now in a big cushion on one of your positions and you've trimmed, stick it on an ascending moving average and just let it work. That's all. Yeah, step by step on how you determine how stocks move together. Okay, so the first thing I would tell you to do is you have to study charts. And just I've always referenced back to the energy stocks in going into 2022. You should write these down. You need to look at your XLE, XOM, COP, CVX, DVN, FANG. Like these are your oil and gas stocks. Okay. Look at the way that they set up going into January 3rd of 2022. And then look at how they broke out going into that January 3rd of 2022. They all had identical daily charts, right? And that is just one of the, just a confirmation that institutions are the ones that are controlling these names. And then you see the exact same thing too. Like if you look at like a TSM, for instance, right? And then you look back here and you say to yourself, okay, reclaim of a 200 simple moving average, and then begin to go sideways. When does this do this? All throughout middle of May, all the way until, basically the beginning of June. Then you look at a name like LRCX. Then you say to yourself, you reclaim the 200 day, and right from the beginning of May all the way until the beginning of June, would you be too surprised if I told you they were doing the exact same thing until the exact same time? Then you look at a KLAC, another semiconductor, reclaim the 200 simple moving average, start to go sideways at the exact same time, and then consolidate and start to break out in early June. And you start to, when you do your homework, you'll notice stock after stock after stock within the same group doing the exact same thing. Same thing with the banking names, right? JP Morgan and company. You get this breakout, you get back above the 200, and then all of a sudden, from late May all the way until pieces of June, you get that move up and you get that sideways digestion. When stocks begin to move together, right? And you've got another one, Wells Fargo, same thing. You get the move up, and this one's a little bit sloppier, but you get that same consolidation. You also have Citigroup. You get the move up, and then you get the sideways consolidation. It's the exact same thing. But the first eye opener for you should be looking at those oil stocks. That was like the first aha moment for me when you realized how these things were all setting up identical. So if you really go back in time and you look at these things going into January 3rd of 2022, you'll notice how identical these are, right? So you get this like bottom pin, effectively a multi-day rally, a little 3-day pullback, and then going into January 3rd of 2022, you'll notice these things started to tighten up and then break out on the 22nd. Then you could take it, another step further and look at a name like ConocoPhillips, right? And you just take it back to that exact same time frame, and you're going to notice how this thing's set up identical, right? So you get that bottom pin, you get that move up, then you get 3 days of pullback in a row, right? And then sure enough, on January 3rd, you get that exact same setup. So a little bit of a pullback here, 3 days in a row, and then a breakout on January 3rd. If you then want to look at DVN, it was the exact same thing. I mean, these things all set up. When I tell you identical, I shit you not, I mean identical. Where are we? We are going into the 23rd or January 3rd. Same thing, right? So you get that bottom pin, you get the push, you get a 3-day pullback, you get a small green day on the 31st, and then on the 1st, it's the same breakout. And if you start to go through all your Oilers, you'll realize, like, holy cow, these things all set up the exact same way. And that was like the big moment when I realized, like, man, stocks set up to move together, right? That's exactly how stocks move when they're in the same group, right? You get that bottom pin, you get a nice little rally, you get 3 down days in a row, you get that small little green day on the 31st, and you get your break out of this little downtrend, right, at the exact same time going into January 3rd. It's the same thing over and over and over and over. And when you're dealing with stocks within big groups, super highly liquid, whether it's banks or semiconductors or oil and gas stocks, they're just setting up together. And that's how you know institutions are involved. That's when you really want to dial in because, right, these things are prepped to move together. So, yeah, that's kind of my thinking. Always remember that. What would I look for in Nugget so that I can short it? Well, I'd want to see an extension away from the 50-day, but this sideways has allowed for that extension to kind of, not be so extended. So it looks like we probably got to move higher. And if I don't know, if we were to go to like $240 or something like that or more in like just a quick succession, maybe a little bit of pause along the way. I don't know. I needed to get extended from the 50. We're not quite there yet. I'm still in Caterpillar. Yeah, I'm still in Caterpillar. My stop is not low day. My stop is the 20 simple moving average. Short Uber. You know, I don't know. We already tried to reclaim the 200 simple moving average on Friday. Yeah, Michael, I'm pretty much mention every single move I make within the market in the room. So it's a good way to learn, in my opinion. Not necessarily to copy, but just to try and understand why, and to learn from my own mistakes. So students in the room could like learn exactly what it is that I'm doing, and then you don't have to make the same mistakes I make. You can just learn from them. No, I'm sitting at the desk, man. I do use hard stops when I just bought something and I got to get off the desk. Um, but for the most part, if I'm sitting here, I'm just watching my stocks. So and scanning the market. Thoughts on DRD? What is this? Is this like El Dorado Gold or whatever? Who's DRD? DRD Gold. I knew it was a gold name, but I don't know their actual. Yeah, problem, with DRD, too thin, 13 million bucks a day. What will be my plan for the SPY? I don't really trade the SPY, but I won't be too surprised if there's a little bit of back and filling, right? You just build out a little bit here, right? Where I'm not necessarily the believer that we're just going to wrap V-shape recover right into these like into all-time highs and then some, right? A little bit of back and filling, I think would be totally healthy. I think even maybe going to test some of this unfilled gap, I think would be completely healthy. Maybe we don't have to come all the way down, but just a little bit of trying to retest that unfilled gap, and then we just build out from there. Yeah, Amgen looks pretty good. I didn't enter FSM. So set less notifications, right? You don't need to have 40 notifications. Again, you can't buy 40 stocks anyway. Limit your focus to 10. Yeah, I trade all my money. I can outperform the S&P 500, so there's really no reason to park it in the S&P 500 when I can outperform it. Yeah, I also, there's no real reason to think gold or silver are going to be failed moves higher. For now, they're just acting too well. All right, guys, much love. I got to get my butt moving. I will see you guys bright and early tomorrow morning. Thank you guys for being here. I'll try to be a few minutes earlier tomorrow, but, I was getting some coffee this morning. So I will see you guys tomorrow. You guys have an awesome day. Trade them well. Yep. Thanks, guys.